Chris is, has made quite a bit of money, and he's got a problem that is a good problem to have right now. And I got a few students that actually have this same situation.
It's the best thing I ever did. Woo!
Tom here, FlipAnything USA. So look, today you're in for a treat. I've got Chris here. Chris has been in the mentorship for what, a couple of years at least? A couple of years.
I was your first.
Actually, it was the last.
the first
student. Yeah, it's a rarity I ever take anybody in the mentorship that's in my town, and for good reason.
It's fun. It's fun.
Yeah,
I always learn something. So it's great.
Well, the economy's crashing. He's closed on a couple of his sales, his deals, and now he's got, about $500,000 roughly that he needs to reinvest. The time is clicking. He's got a 1031 in place. He's like 4 weeks or more into it, like 4.5 weeks into it, right? More.
Yeah, I only have one more week.
He's got an
option period.
He's got a week left to identify his properties, and he's got one deal. I wouldn't even call it a deal. He's got one property that's not a great deal, and so his problem is he doesn't have anything to buy. He's reached out to me. Hey, what should I do? And it's so we're going to talk about all these kinds of things, and I'm not in his situation. I don't have any money to defer at the moment, and I have properties to sell that I'd like, but I won't sell them until I do roll them into something else. And everything I got, I'm comfortable with. I've actually hit it right, this cycle, and I've been through many cycles of different things like this, but this is different. This is different. Most common question I've been getting is this going to be like 2008? And it's not, and I'll tell you why. In 2008, interest rates dropped like a rock. I had just borrowed $3 million, and it went from 5.5% to 2.5%, just within a couple months. And so I was thrilled with that situation. And it made a bad situation much better and easier to tolerate. Because I had several adjustable loans besides that, one that I just made for $3 million, and my cost to operate went down as a result of that. My payments went down, and I had other things that were suffering, and this offset that. So we don't have that. We have just the opposite of that. We have a recession, and we have escalating interest rates. It's like a double whammy. So it's going to be worse. And I am never quick to predict. The only thing I always tell everybody is the only thing I know for sure is I don't know for sure. Because the government can intervene and, make things much worse. They never really, you got to understand, the government's easily influenced by money, lobbyists. They represent a very small piece of the country. That's why you can't count on them to do what would really be best. But Chris, just go ahead and let's talk about what you're worried about.
Per your coaching, it's I can't tell you how many times when I'm looking at real estate, like, you're in the back of my mind, like, saying different things I've heard you say through YouTube videos like this, or...
I think I'm pretty consistent, though.
Yeah. Well, but you say the same things over and over, and that's what I need to hear.
Yeah.
Because you talk about the most important things over and over and over. And so I always learn something new, but the consistent things are just continually hammered. One of the things that I've heard you say quite a bit is, like, the worst thing you ever want to do is get into a deal that you shouldn't. It's really easy to get into a deal. It's really hard to get out of one.
Yeah, easy to do, hard to undo.
Right, and
That's
so...
walking mantra.
Yeah, and so I think one of the things, if you're in the middle of a 1031 exchange, you could trick yourself into thinking, oh, I need to get my money into a deal so I don't lose it.
Right.
Well, the truth is if you get yourself into the wrong deal, you are going to lose it.
Well, here's the problem is that you're kind of going into a declining market. And so he's looking at a multifamily property right now. The price he's got is okay, but
it's an 8-unit. They wanted $490 for it.
But the bottom line, it's about a 6% return, maybe 7, right?
Yeah, even if you drive the price down like I have, I negotiated them down to about $430, $440.
Yeah.
But still, it's only a 6% cap.
But his problem is this: he's already locked in with the lower rate. But whoever he sells it to doesn't have that going for him. It is going to get hit with higher taxes because it's going to sell for a little bit of a profit. And then the other thing is they've got higher costs to support the borrowed money. and the interest rate is going to translate to another 0.75%.
Which I'll also jump in right here, Tom. Something that I'm thankful for, and again, we talked earlier about you being a mentor and me going off and trying to blaze my own trail and whatnot, and it's not a hand-holding experience. Like, I got to figure this out, right?
Yeah.
And I will say, my option period, it's going to cost me $1,000, but this $1,000 is some of the best money I've ever spent, in the sense that even though this deal isn't going to work out, the expenses that the seller gave me, I did my due diligence to take a deep dive on analyzing every line item of those expenses, and guess what? They were wrong.
Yeah.
And so instead of me just taking it at face value, and
which, by the way, you can balk at that. You can say, hey, listen, I think I need to get some of this option money back because you misrepresented the numbers.
And
so
there you go.
So there you go.
Yeah.
Tip.
So there's
you get
that.
500 of it back.
That's great. But the property taxes he had listed at $2,800 a year.
Yeah. So that's
But they're actually going to be $10,500 a year.
Yeah. For
So
sure.
that eats into all my profits.
Yeah. So I don't like the deal. I think the best thing for Chris to do is just, anything that you're working on that potentially could turn into a good deal, put it on your buy list. You have a designation letter, your designation list. You got to put 3 properties on there. So put the top 3 that you have a chance at getting. Even if you don't have a contract, you have a chance that it may happen.
Right.
And believe me, one of my last designations letters, I bought 2 of the properties that were on it, and I didn't have either one of them under contract, and I ended up closing both of them. So things do happen, and believe me, there's motivation. You're going to see also people, a lot of people, you don't have to worry about them falling out right now. If you have something sold, and I say this to Herb and some of the other students that have things, Eric, that have stuff under contract that they're selling, and we're perusing my properties. Like I say, I keep an eye on my assets, so we're driving through looking at some things. The person has got a commitment at a low interest rate to buy your property. Unless they're a flipper investor, they're going to probably close because they aren't going to be able to get the money as cheap today as they could yesterday.
That's right.
Yo, stop and listen. Time is on a mission to eliminate all of the snake oil and the fake gurus that fake y'all. He'll show you how to build an empire, starting with nothing but a desire. All you really need is a good mentor, not a used car bullshit. With time, you'll learn to crush it. Investing like Warren Buffett. With real estate, you cannot procrastinate. Everyone who hesitates is left at the starting gate. Hey, yo, so don't delay and join today. The Mentorship and Flip Anything USA. Go.
So you can feel a little bit better about that your odds are better for closing what you have sold. Dress for the crash. I say it all the time. I was talking to a couple students yesterday, and same thing, dress for the crash. And that just means get ready. And one of the things I'm doing right now, I'm like trying to get 110% out of my properties. In other words, I'm raising rents where they should be raised, doing longer term leases. Still everybody gets a deal on their deal. Whatever I rent, I give them. I'm usually always under market. And the reason for that is that's my hedge against, I want them to survive.
You want to keep them in there.
I want them to survive.
Yeah.
I don't want them to survive. I just want them to survive. I think it just comes from coming from very modest means and really a poor childhood for me. When you don't have money, you're very much aware of how important it is to have. And where if you're born with a silver spoon in your mouth, you really don't know what that's like. Eat bologna sandwiches or mustard sandwiches and powdered milk and all the crappy food that comes along with welfare, which I got a good taste of that when I was a kid. So I immediately go into, even though I'm very comfortable, I still kind of fall back into the mentality from even 30 years ago. I was still like, very petrified of what could go wrong, but now I'm so heavy with equity, I'm pretty bulletproof. I can get hurt, but I'm not going to go down. It's best to always think worst case scenario in your head and then take the precautions so that it don't happen, or if the shit storm hits, you're prepared for it. And it goes back to what I always say, dress for the crash. And there's nothing going to make you more prepared. See, I'm super comfortable. Everything's really good for me. But that doesn't mean that one of my hundreds of tenants aren't going to have a problem. And they might crash, and their crash will affect me.
Right.
Because they'll go down, and then I got to replace them and, you know, put somebody new in their spot.
And if it happens to multiples.
Oh, easily.
You know.
Oh, yeah. And believe me, that happens, and I'm glad you mentioned that, because, you know, there was a time I really concentrated on, because I had a hot situation in an area, and I was just buying the shit out of lots, flipping them, making, you know, double and 3 times what I paid for them. And I carried a lot of paper. I carried, you know, probably $1 million in notes at that time. And this is before I was even 30 years old. So I really enjoyed the income. You know, I'd make 10 grand on a property, you know, and I'd, you know, maybe 15, 20, and I'd put maybe 5 grand cash in my pocket. So I'd be all my cash back plus a little cash in my pocket. But then I'd have a note for $10,000 to $20,000 that somebody's paying me anywhere from $100 to $250 a month on, you know, and some bigger ones. I sold, you know, I made 100 grand, I made 300, and had another note. I actually made over 400,000 on another deal, but I got 295,000 of that was in the form of a note, and they paid me $2,450 a month, and you know, and that was like interest only with a balloon after a certain period. Well, they went belly up 2 years later too, because they got overconfident and they cross collateralized properties, and anyways, long story short, they couldn't make the payment anymore, and they ended up deeding the property back to me. I said, look, I don't want to foreclose on it, just give it back to me. And they did. They gave it to me, and then interesting enough, somebody they were trying to sell it to came back and wanted to buy it, and I made a deal with them, and I sold it. I gave them a $20,000 finder's fee for finding the buyer, and I sold it to the buyer, and I still got a nice chunk of cash. Didn't realize quite as much money as I would have if everything had gone smoothly, but I got, you know, probably 80% of it, so it was good.
Hey, can we talk a little bit about, like, earlier, and maybe this applies to some other investors in the class, but the hesitancy to buy right now because you think it's just going to get worse and worse and worse. And so you always talk about, you know, let's buy 25-30% under market value, but by the time you buy it and then fix it up, and then, you know,
And you're in a declining market.
right. And so what thoughts on that?
Well, I'm still buying. I bought one last week, or I'm closing it tomorrow, Friday. I'm closing it tomorrow. And again, I'm aware that we're in a you know, things plateaued somewhere. So I'm going by a property here, and this is when my guys are in front of me, and they're moving things down and taking a banner down, and we're moving a sign, and we're getting a person relocated. Let me ask Miguel. Hey, Miguel, what time do you suppose everybody will be over there? It looks like they're getting the puzzle piece mats now. I see it. And then just roll them up. Okay. Well, I'll see you over there. All right, thank you. So there's things that I'm doing like this right now. I'm making it easy. I enticed one of my tenants to move into a different space. It's a good deal for them, a little cooler, better property. Suits me well because I'm able to take the existing tenant that's next to them. They want to expand. They're going to expand, take their space, plus the common area, the areas that normally are shared will no longer be shared. They will all be part of this other person's space. So now I'm getting, you know, $2 a foot roughly for all the common area too. In the end, for me, it's a net gain of about 200% over what that rental was giving me, and it works out for everybody. Those are the things that you'll learn from me and my mentorship, and from my book. Where's the book? In my book, Wake Up and Smell the Real Estate. Which, look, this is $10, Audible and Kindle. You can be listening to it in a couple minutes. You can go listen to a sample for free right now. But you know, or buy the book. Most people buy actually 2 or 3 formats of it because they want to listen to it. They want to have something to reference the forms that are in it. There's no pressure. If you got an interest in real estate, this is the place to start. And I think this might even be refundable from Amazon. So nobody's going to offer you that. In fact, I just got off the. Sadly, there's a comment under my last video. And I think the guy's talking about Chris Crone. They kept trying to sell him everything under the sun, kept rotating him through different salesmen, and the last one got him for $5,000. Said, oh yeah, the guy's name was Nathan. Said he'd be there with me and help me, and he said he never heard from Nathan again. I got no support. Jeez. So the last thing you want to do is piss away your seed capital. And by the way, as we're driving by here, there's 5 houses that I bought on that side we just passed. And a restaurant. You always got to watch your properties. This is one of my other buildings. I'm just doing a little.
And you know, you say this all the time in your videos, Tom, but I'm vouching for you because I am a student, a friend, somebody that lives in the area. I also watch other YouTube channels and from other investors and trying to learn Nobody else does, at least that I see.
I don't even know anybody that does what I do, to be honest.
They're not doing this.
Yeah,
know?
yeah.
Like we're walking through your real estate.
Yeah.
We're walking through your portfolio. And,
Yeah.
And if anything, it just gets me jazzed up. I'm excited. I'm like, I can be at this place someday.
Oh yeah, he's on his way. Hey, you talk to the folks for a minute. I gotta grab. I think I got my my purple belt. I got a purple belt, so I'm halfway to black belt in jiu-jitsu.
I can
think-
tell them about my different deals.
Yeah, go ahead and chat. I'll be 1 minute or less.
Gosh, learned so much from Tom, and so much so that I'm really comfortable making my own deals now. There's a couple of options right now, and I'm a little bit all over the place and trying to decide what I'm going to do with my investment money, my capital. But I have learned this: you have to know where you're at as an investor, not where somebody else is at as an investor. And right now, I'm not nearly, of course, nowhere near Tom's level. And so one thing that is really appealing and what I see Tom do a lot of is he has a lot of properties that he does hold and lease out. But that doesn't mean he's out of the flip game. I always see him flipping properties. And so for me, of course, what's appealing is it sounds nice to have a property to hold on to, and you get that little cash flow every month and you just kind of know that it's coming in. Like, that sounds theoretically nice, but when you start putting pen to paper, for me, where I'm at, for example, for my 8 unit that I have a contract on right now, I could cash flow that. It would bring me in $45,000 a year on my $430,000. But I could take that same $430,000, buy a house, put some money into it, flip it, and maybe make a $100,000 profit.
Yeah.
And I could maybe do that if I really got after it. I could maybe do that 2-3 times a year.
Yeah, see that's
and I have to change my mentality to get back over there to that, maybe, rather than just these buy and hold bigger pieces of property. So, and Tom and I were talking about that.
Yeah, I mean, the best part about it, folks, it's just numbers. It's just math. There are some variables when you're under, if you're under the constraints of a 1031, now you need a property. You got to have a property that's really good, that you can, maybe you get a 9 or 10% return on it, so that you can go borrow 3/4 of that money again. Still maintain, you can still get maybe 21 or 22% return on cash. You got to leverage things to a degree, but you got to do it safely. That's what's important. Doing the right things. Just always optimize. Just like I optimize my assets. I've got food parks, food trailer parks and truck parks, whatever you want to call them. I've had apartment buildings. I've got lots of commercial, industrial, different kinds of rentals like that. And you maximize your assets. And right now that's kind of, I've gone into a fix-up mode where I just want to fix everything. And this is a good place to be. So in other words, I'm concentrating on customer service. I'm getting closer to my customers, making my tenants are my customers, making sure they're surviving, making sure they're comfortable, making sure you want to keep them close. If I sense somebody's going down, I might do something to help them so they don't go down. And that's one of the beauties of making money in real estate, is you can extend some help to those that need it, whether it's friends, family, or tenants. Back to the main subject here. He's got cash, declining values, or just say a plateau at best, escalating interest rates. It's going to be worse than 2008. I mean, I'll just go ahead and make that guess. It's going to be worse. Interest rates going up is the worst, in the inflation. So it costs more to build, it costs more to remodel. Now, this can make your assets worth more because they're more expensive to replace. But when things really get devastated, a lot of times you're buying assets for less than construction costs, and the land is free. So I caution people on land. I mean, you can still do it. There's always going to be people that can afford it. There's a lot of money out there. People don't realize, but there's a ton of money out there. You may not have it, but there's a lot of money out there. And I call it stupid money. A lot of people come into the country with a ton of money. Countries that are going to shit, they're getting out of there with their cash, and they come here and, they spend it foolishly and drive the values up as a result of buying foolishly. And then it hurts guys like me that hold a lot of property, that are they try to hold me at a value. It really doesn't make much sense. But it's not fair for these tax assessors to extrapolate a stupid purchase and say that, yeah, this is the whole market. You know, the money you can make with purchases that even are under 100 grand, you can double your money. Now, that's been my experience.
I actually did that this year twice.
Yeah, it's easy to double your money with investments under 100 grand.
And they were one was a vacant lot, and the other one was a actually on that one I tripled my money, but one was a vacant lot, and the other one was a lot with a really nasty mobile home on it. I mean, the thing had holes in the floor, mold, everything. Somebody actually came and paid me $3,000 for the mobile home, which I would have had him haul it off for free.
Yep.
And then I doubled the lot value because it was just a good location.
And I was telling him, just rent it.
You can't live in that. It needs to be
Well,
remodeled.
you'd be surprised people can live in. But listen, nobody should have lived in the trailer I lived in when I was 20-something years old.
Hey, but you know what?
But I was hardly there. It was a place to crash.
I've done a lot of short-term rental stuff, Tom, like Airbnb stuff, and I know the channel. We've talked about that before. But I would tell you what, right now, I would be very hesitant to get into that market and make something of it because, especially with the economy going the way that it's going, I can tell you right now from the one Airbnb that I own and then the other one that I recently sold because I'm in communication with those owners, it's slowing down. People are not traveling as much. People are not spending as much. And
they're hunkering down.
But people need a place to live.
Yeah.
They need a rental home. They need an apartment.
But they don't rent for as much as the Airbnbs, though, right?
They don't, but I would rather, again, going into
Stability,
something, I would like to know stability. Like, I'm getting a check every month because that person's living in that house, rather than wondering if somebody's going to travel out to my Airbnb or not. Anyway, I just wanted to bring that up and make note of that for anybody that's considering getting into the short-term rental game. I'd be cautious.
Well, look, just like I am always looking for, 20,000 square foot plus buildings, stuff anywhere from 3 million to 8 million, and it's tough to find stuff that fits my criteria, but I do find it, but it takes time. Well, in between these searches for the gold that I'm looking for, I pick up these little deals. I can pick up houses that I can flip like I just did, and this stuff that's available to everyone. There's more houses than anything out there. That's why there's more opportunities with houses, because there's just more of them everywhere, and land and lots too. And you can make a lot of money, flipping land. You can do it with anything. You really can. That's why the channel is FlipAnything USA. You really can.
You can flip stuff on Craigslist,
you can,
Facebook Marketplace, which is a great way to build your capital if you're in a position where you're not starting any money.
I'll tell you what, buying a piece of machinery that I know is worth more than I'm paying for it, I mean, it's just like a little fix. If you're a drug addict, you'll take a little hit of something to get you through. That's kind of, real estate's, almost feels like a drug. The investing is, you want to always be
finding a good deal is very...
You're hungry. You want that feel good, which is making money feels good. Anyhow, what do you think? You want to say something nice about the mentorship?
Yeah, absolutely. Get in the mentorship. FlipAnythingUSA.com. I mean, everything you need to know about investing in real estate, whether you're a rookie or a veteran. You're going to learn something from Tom.
And was I available to you? Yeah.
Yes,
No, by phone or otherwise?
No, by phone and text. I'm always running deals by Tom.
And it makes a difference, right?
He shoots them down, says stay away from it, or he says, you should look into that. So it's helpful.
I'll always be honest with you. I always tell you, just treat it like my own. There's no guarantees in this business. If you don't try, you're never going to make any money. You got to get out there and make it happen. Yeah. So thanks, Chris.
Yeah, thanks, Tom.
All right.
It's the best thing I ever did.